Okay, cool. Test. All right. Welcome, everybody. Today is July 21st, 2025. And it's been an incredibly busy week. So, for those that don't know, my name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. We hop on and we do a weekly stream here with Bookmap. We talk macro, we talk markets, we get in and we talk cross asset, but predominantly what we talk about for the main outlooks is Bitcoin and Ethereum, right? And so those markets have been continually making headline news over the last week, so we have a lot to talk about. So if you want to reach out to me personally, you can do so at _ my last name on X, Riegle, or you can reach out to us at DARMA Cap Trading, or myself personally on LinkedIn, just my full name. So let's get into the disclosures and then we'll break it down. So all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, right? And so each session that we start out each week, we talk about risk capital, right? And so what do we mean by risk capital? Do not trade with capital in which you are not willing to lose, right? And that is anything that you need for bills at the end of the month. That is anything you need for groceries at the end of the week. That is anything that would, such as a concert or hanging out with your friends, right? The reason for that and kind of why we talk about that first is what we like to talk about are the facts, right? So the facts of the market. We all know as traders, our job is to take the best risk reward setups, right? However, there's always risk, right? And therefore a byproduct of trading is also losing. And so if you can't take a logical loss, if you can't think logically and psychologically, you're just all out of sorts because you need to make bills, you need to make rent, you need to do all these kind of things. You are not approaching the market in the best mind state. And so for that reason, we deem risk capital better to be used for all those vehicles in which it needs to be used, right? Bills, making your life better, right? Going to a concert, those kind of things. But what we talk about here on the stream is how to deploy that risk capital when you have it and you're ready to use it. All right, we're gonna actually skip over this slide because we'll go into the website now in a little bit. But for those that are new, I do see a few new faces. How we break down each session is a top-down approach to markets, right? So we take a step back, right? We're not thinking about the weeds and what's going on in the world, right? What's impacting markets on the here and the now, and what could potentially impact them in the future, right? Remember that markets are forward-looking. So we also need to be forward-looking when we look at markets because that's all getting priced in. Last week, we kind of talked about the large narrative behind the scenes of kind of the Ethereum market. And so that's kind of where I want to pick back up in because since last week, Bitcoin's been relatively muted. And so we got that price over 123.5, and then quickly we reverted right back down to 118. And we'll talk about the Bitcoin outlook and some of the structure and all of that. But what has stolen the light and all of the news outlets and basically everybody's talking about it is Ethereum. And so last week we specifically talked about a lot of those bills going through, and it was crypto week, what was deemed to be crypto week from Trump. But specifically, I want to take a kind of a very broad picture here and talk a little bit about it because I was talking to somebody that was a bit removed from the crypto space and was just generally inquiring about it, right? And so I've been involved in this market fairly active in 2017, a couple years of less activity, and then very, very active since 2020, and very active in the option space. And so I've seen that market grow significantly which has been incredibly cool to see. During that period in time, and there's been more cycles, right? But I can only speak to a lot of the cycles that I've actually traded through and been a part of, right? And so I've seen the ICO craze. I have seen the JPEG mania, right? The NFTs. I have seen the infinite liquidity, right? That's 2021 when you got the all-time high of Ethereum currently priced into the market near 4,900. And just rapid accelerations in the underlying assets and then rapid declines, right? I've also seen the other side, right? A lot of these bear markets where last one in particular was lack of clarity from administrations, lack of ability to build and grow businesses within this space, right? Which pushed a lot of innovation outside of the US, right? I am currently based in the US. And this current time is one of the best actual narratives I've seen for the market, right? And so let's talk a little bit about fundamentals. Any market in which you trade, there is a natural buyer and a natural seller, right? And so that can come in the form of apples, for instance, right? If all of a sudden there's a crop harvest that is a problem, a pest that gets a bit out of control and it shrinks the supply of apples for the year, and all of a sudden now you have X amount of apples and you still have Y amount of demand, that price naturally needs to compensate for that demand, right? And that's how relative markets exist, right? And that's how all of these markets, for the most part, exist, right? Obviously, there are certain markets that have restrictions in the form of rent cap, in the form of all these other different kinds of things, right? However, free markets, that's basically how they exist. In the past, the ICO craze was great for an initial boost of liquidity, an initial boost of capital into the space, right? It was a vehicle, basically a bootstrap way to crowdsource funds. And what that did was it created a lot of projects, but not a lot of real value, right? There became a period in time where there was a massive dilution of those projects, and a lot of people that were just looking to get rich and not actually spending the time to build actual products, actual product suites using the fundamental Ethereum layer, right? So that was a boom and a bust. The next, obviously, we saw 2021, infinite liquidity. And that's when broadly the world was shut down and locked indoors. And so anybody was buying everything and the government was funding it, right? Interest rates here in the United States priced all the way down to 0 to 25 bips, which is a stark difference to where we are today, over where we've seen the fastest rate increase in history. But nonetheless, people were still buying, right? So you had this synthetic money flows that had to go somewhere, and that went into the form of GME, that went into the form of massive speculation everywhere. But naturally, as a byproduct of liquidity, assets did appreciate, right? And so we saw Ethereum, Bitcoin, all of these assets really start to squeeze and see significant increases, right? During that period in time, you also had DeFi, right? The emergence of DeFi, that which was very promising and still is around as a very promising tech, was in its adolescent stage. And therefore, you had NFTs that came out, and you saw crypto punks, you saw Bored Ape Yacht Club, right, selling for hundreds of thousands of US dollars, and then if not more in the terms of millions, right? So there was a general frothiness, right? And so people were willing to pay significant amounts of US dollars because they could, for something that has lesser value today, right? And when I say that, I do mean that CryptoPunks, for the most part, I mean, those are the first largely recognized NFTs on the Ethereum blockchain. So there is some novelty, but there just becomes a massive dilution and a money grab in that space with an adolescent technology, right? NFTs are widely used in DeFi and are still fundamental for technology, but in that predominant use case, we've seen a massive decrease, right? And so again, you get a boom and a bust. Now, present day, we have, and let me see, I'm going to actually toggle over here to this strategic ETH reserve XYZ, right? Which is, anybody can access it. It's a list of companies and a list of treasury companies that are holding Ethereum, right? And so if you've seen the news recently and you've seen kind of, I don't know, just pull up CNBC, pull up any of the news outlets, Ethereum is the talk of the town, right? And why? Michael Saylor pioneered basically a treasury company framework in Bitcoin that actually is wildly successful, right? And so the replication of that into the Ethereum space is now getting replicated, right? For the first time in a long time. What does that create? That creates natural buyers of the underlying spot token, right? So kind of reversing back to where we were talking about natural buyers and sellers of markets, same thing here. It also creates accessibility to capital inflows, right? So not only do you have the Ethereum spot ETFs, you also have Ethereum futures ETFs, but now you have these other treasury companies that have and hold spot on their balance sheet, right? That creates a lesser supply in the market, right? And same thing goes for a lot of the Ethereum is being staked, right? So for those that aren't familiar, a core piece of Ethereum 2.0 is the proof of stake mechanism, and now you can stake it and earn a yield, right? And so what that does is that creates a security layer for Ethereum. I'm not a dev by nature, so there are many people that could speak far better on that topic than I. But basically, what it creates in terms of Ethereum is a yield-bearing asset, right? And with that being said, it also locks up supply. So now if you have a massive amount of Ethereum that the float is being locked in terms of staking, and then you also have a large amount of demand in form of these treasury companies and the same amount of spot issuance, you have a difference, right, in the market. And so in order to accommodate for that, fundamentally, we've seen a very large and very rapid increase in the underlying asset. So kind of long-winded answer, but what I'm saying is we will see how this progresses. However, the fundamental buying of the underlying spot market is totally different than the complete dilution of the market that we've seen in previous cycles. So that is the bull case, and that is a fundamental case to lean on when you're approaching this market and thinking about it. It's also something to think about when you're thinking about volatility, right? There's a lot of ways to express viewpoints in markets, right? You can buy the underlying, or synthetically, you could buy the underlying by selling puts, right? So there's so many different ways to approach it, but it is a very cool and very different shift in the fundamental nature of the market than I have seen in any of the cycles that I have previously gone through. So that is basically what's been going on in the macro, and Ethereum is basically stealing the show, right? And so as long as Bitcoin is kind of reserving that price, we're seeing a massive rotation into the Ethereum market, right? So let's dive into kind of the weekly outlook and know about kind of that macro, right? And so just because we have that positive macro tone does not mean that price can go the inverse. Price is always king, right? So let's go over here. So this is our website for those that are unfamiliar. If you type DARMAcapital.trade, we launched it this year. We're rolling out a ton of different stuff that we can that we're doing with it, but it has all of the pillars in which we represent. So we have an advisory business, analytics, and then we also have an academy. You can head to the sign up page, and we also offer a ton of free stuff as well. So that's what I'm here to show you right now. So all of our subscriptions, obviously, they all have 2-week free trials. And then down here on the right, you can see a free trader assessment and education. If you fill that out, you'll go through a trader assessment, which I think all traders should do. It helps you better understand who you are as a trader. We kind of basket traders into 3 different buckets. Those that are totally discretionary, basically a cowboy, right? Those that are better in teams, right? So they need a little bit of structure, but they have that creativity and they have that natural intuition about markets that has and creates an edge. And then the third is a totally systematic trader, right? And so that is a trader that should not be making intuitive decisions, but should rely on statistics, should rely on machines, and really take that person out of it. So feel free to check those out, especially the trader assessment. It is free. Let's hop over to our data and analytics. So that's what all of those subscriptions were, just different access levels to what I am about to show you right now. And we talk about the weekly structure, and then sometimes we bring in the monthly as well. But we're going to talk about the weekly again here today, going over Ethereum first, because that is what we've been talking about the most here. So obviously the market had a massive rally. So last week we were right around under 3,000, and now we are nearing in on 3,800, 3,750 at the time of this recording. And there's a couple things that we need to talk about. So each week we go through the state, the structure, the strategy. We have some options here as well that we can go into, but we break down the market. And so first thing we start with is the directional. We see this as our classic pivot, right? Over it's positive, directionally positive, under it's negative. The next piece that we talk about is this green level that you see down here. This is our R level, right? This is a proprietary level that we deem sentiment to be off of, right? And so that is basically tells you that the sentiment's positive, price is positive. That means we're looking for structure levels to buy. And if we break under the directional, we're also looking for structure levels to buy, knowing that this sentiment level here is the defined level that we see each week for risk capital, meaning it's the best area for risk and deploying that risk capital. Sometimes you get an opportunity there, and that is a cue to size up. Sometimes you don't, right? Sometimes this market just runs and holds true to some of the states. So currently, the market state is in a bull trend positive, right? So a bull trend positive is a signature state and is the result of a market producing a positive technical signal in a bull trend market state. It is strength on strength signal with the expectation for the market to continue to build higher move highs and higher move lows, positive structure. If the market continues to hold structure, further gains should be expected. This does not mean there cannot be corrective setbacks, but rather any negative price action is expected to exhaust above the lower inflection point that will maintain positive structure. A market in this state is typically making a move, and like a balloon underwater, right, cannot be kept down. So every time that it takes a drop here, then it pops. Every time, and we'll see if it holds tonight, and we're going to talk about some of that outlook here. But you get a pop, you get a break during the regular session. Let's see if we can pop, right? That's kind of if a market is going to perform to this state, that's the expectation. Only use exhaustion signals as resistant levels to work a long position rather than initiating a short, as the signal is more likely a pause for the cause instead of a negative turning point. Any failure or break in the positive structure is more likely to produce a neutral shift rather than a negative transition. The market state is where the term "the trend is your friend" was coined, right? So if we zoom all the way back out, you'll see the full rally of this never broke structure, right? You get your first advance, you get a slight pullback, next advance, a higher high, higher low, next advance, higher high, higher low, next advance, higher high, right? And now we're in this kind of digestive area, right? Do we perform to the state, right, and hold these structural lows right around 3,700, which is in alignment with your previous week's high, right down here at 3,700? Or do we get a break in structure all the way down to 36, 37? Remember, back to the market state, if we do get a break in the structure, it is less of a reason to just outright short this market, but more of a reason to look for a positive digestive shift, right? Which means shorts are going to look to step on the gas on a break under 3,700. They're going to step it on all the way down to 36, 37. And if the market holds there, they're just going to get stuffed and they're going to get exhausted. And realistically, the market doesn't go negative in terms of price until we really get under this directional level, right? So this full range is still positive. It's just neutral digestive. For momentum to continue, right? Let's talk about momentum. A hold here on these 37.20, really on the previous week's high, which is right in that 3,700 area. And I actually have, let me see if I can. Yeah, previous week's high was right around 36.70. I have it up here on another screen. So as long as we can hold these levels, the expectation is we're going to perform and the market's going to pop right back. It is good to use 3,800 as that over-under number. As long as, if we can base over 3,800, this market still has legs and the momentum is still on, right? We're in the last week of the month. The July options expiry is the 25th, right? So 4 days, basically 4.5 days on those left. And a market over 3,800, there's no reason to say that this is a short, right? And so where does it target? That UT1 is a good natural first target at 4,100. And then your extension high here for that significant rally would be that 4,400 area. It sounds crazy. The narrative is positive. It's getting baked into the market, right? We are seeing pricing into the market. However, price is still not broken structure by any means, and therefore it can continue higher. Let's talk about the structure here. So we just talked about it. So the R is less than the DT1. So this just gives a little bit of insight around the R level and specifically the sentiment, right? So of the market. So R level below the DT1 in a bull trend positive is its technical state extends the underlying aggressive buy posture down to this price point. If the market is going to perform to expectation, the pullback will typically either stabilize off the DP or off the R level. A market has generated a positive technical signal in a positive trend environment, but remains vulnerable to a squeeze down to the R level before it can follow through. The market doesn't need to correct before it rallies, but if it does, it is a break to buy on any positive turn in momentum. Early session UP breakout signals should maintain positive trend structure. A break in structure or a reversal puts the R level support as a target objective of any counter trend trade. So let's talk about it. What does that mean? Same thing that we just talked about, except this showed a bit more color on the downside, right? So technically, we produce a sell UP reversal here, right? Which we've talked about in previous streams. Basically, a normal sell UP reversal, you get a price through, a quick reversal, and then a break in structure that targets immediately down to the weekly directional. Because of the market state, it would not be indifferent or non-unique to see a base here and a re-ramp in the overnight session, right? As long as we can hold the previous week's high, there's no reason to say that this market has to go down to the directional, which is talked about in the state. talked about in the sentiment bias is saying that if it does happen and we do get a break under the directional, right, market should stabilize off 32.36. And if it doesn't, then the optimal place to really look to deploy risk capital is down here at 27.95, right, where the expectation is for a fade, a buy R fade, right, which is buying off the R, risking these two dashed lines, and the expectation is a reversal right back into this range. So that is talked about here in the strategy. So I kind of jumped the gun a bit, but hedge theme is currently what we're in, right? So I do want to talk about that. This market really needs to base over 3,800 in the next 24 hours. Otherwise, it's at risk of a breakdown to the CR plus, if not the directional. Again, back to the state. All that means is that is a neutral positive digestion versus just an outright short, right? So don't get caught up in the fact of chasing a downside move when there is such positive momentum to the upside, as well as a positive macro narrative, right? And then best places for buying the market are off the DP and then off of the R level, right? However, if this market doesn't even get there, which it's proven that it's having a hard time of breaking any structure, 3,800, as long as we can base over there, the expectation is 4,100, right? And then there's always a what if. What if we break through there, right? You get in a euphoric climb, right, into the end of the month, and you get that chase. So that is the Ethereum outlook for the week. Let's pull up on the right side here. We have Bookmap. So let's pull up some of those resting liquidities areas. Let's see where they align specifically with the price map, right? So down here at 3,400, direct alignment with the weekly directional, a little bit lower, and then 3,350. So the resting liquidity seems to be on the lower side here with the CR minus. So not huge in terms of being helpful, right? Not a lot of alignment at the directional. There's not a lot of bids that are stepping up here at 36.30. We do have a resting bid there on the screen at 35.50, somewhat in the middle of the range, right? So we don't see alignment there. And then let's look at the offer. The offer, we're seeing 38.75, which is right up here in the middle. So just over today's highs for a breakout. One thing to note on that offer, it's not a ton of coin, about 5,000 coins sitting up there. Take a note of it, as a lot of selling the breakout and reverting the breakout can catch you off guard if you're just chasing breakouts, right? So if that offer doesn't lift in the book and just continues to refresh, that's your cue that, hey, this market may stay digestive for the balance of the week, right? All right, let's jump over to Bitcoin and take a look at Bitcoin. We'll pull up the weekly here. Cool. So Bitcoin led the charge last week, right? And we kind of talked about that. And then we talked about that rotation into Ethereum being possible. Typically, you see that rotation naturally, right? However, the narrative is so positive this time that you are seeing kind of an exaggeration of that rotation that honestly we haven't seen in a couple of years. So let's start out with the directional. Same thing. Directional is at 118 basically. So 117,900. Under it's negative. However, the price, the R level is under the market. So we're looking for breaks to buy, right? Where are we looking at breaks to buy? DP and the R level are natural buying zones to take a look at. So 113 3/4 and 107 3/4 roughly. or 107,900. Apologies. So the state of the market is in a bull trend digestion, right? And there are a lot of resting orders in the Bookmap. So this will be fun to talk about. Let me zoom out a bit so that we can kind of get a good picture here. All right. So a bull trend digestion is a signature state, has an underlying positive foundation, but the current expectation is for a sideways digestive trade. Typically, the market has made a sharp advance in a prior session or needs a sideways session or two to catch its breath before it can resume the bull trend. This is a difficult trade state with low volatility, one-way price movement common, as well as choppy false breakout signals at the extreme. The signature state can also be the precursor to a negative transition into a broader neutral market state. The tell for any shift is a break in price structure. Any negative shift is more likely search for a new lower digestive extreme, so don't press any weakness and instead anticipate a bounce back into a digestive posture, right? So we got the advance, we got continued advance, and then immediately we get this price structure break. We get a retry, and then we've just kind of been digesting here at these new highs. And it's just been just a complete compression of the range and just no volatility. So Bitcoin continues to frustrate traders that are looking for that volatility that it once had, and vols continue to be sold. So, and let me, I'm pulling up Bitcoin volatility on my other screen over here just to make sure. I believe we're still under a 40 handle. Oh, we are over the 40 handle in the 30-day. So we've been trading roughly around a 38 to a 41 handle on the 30-day, which is historically quite low, relatively speaking, and then also very low, notating an all-time high breakout. So kind of what I talked about last week, we're still in a price discovery phase, and that's part of this. So the market is fine digesting here. It is finding that digestive range. Expect choppy digestive action, right? Where do you want to look to participate in this market? A couple things. One is we just went through this, so I'm not going to re-go through this. It's the same commentary here, talking about the R level under the DT1. So we have that DP and that R supporting the market on the downside. So if you get a break under the DP and immediately you get a rally right back through, that likely produces a buy DP reversal. And the expectation of a buy DP reversal is a buy 113 3/4, sell 118, right? So just neutral digestion, sloppy trade, right? If the bull trend's going to remain in a bull trend digestion, you can see how sloppy it is, right? So the directional is right here. We have the critical range, and then we have an R level. So an advance to the UP, a break to down under the DP, it's just lack of direction this week. Now, it's a couple things to think about. All market states can be proven wrong, right? So let's actually talk about the inverse, because it's easy to say, all right, fade a 122.5 or 121.5, buy a 113 3/4, revert it back to the mid. Great. I think all traders broadly can understand how to take advantage of that market and use the playbook to help them leverage that. However, let's talk about not blindly doing it. If this market base is over 117,900 and makes a positive advance, and I mean positive, meaning it needs to hold positive price structure, not ramp all the way to 120, revert back to 118, ramp to 120. No, that's performing to the state. It needs to ramp to 120, hold 120, and advance to 121.5, right? At 121.5, the market has a decision. It's either going to remain in a positive price structure and advance out of this bull trend digestion, or it's going to reverse back into the bull trend digestion. We are talking about the flip of the coin. If it were to prove that the state is wrong, A held trade over 121.5 with positive price structure is the tell for an advance to a new all-time high at 125 in 4:15:30. 121.5 is the most important level for that, and that needs to hold, right? If it can't, we remain to this choppy digestive state. Same thing to the downside. Downside's a little bit different because of the nuance, right? We have the sentiment bias here, so we actually have a defined buying range versus on the upside, we kind of just have this UP defining that potential reversion trade, UP to the CRX plus. But on the downside, right, remember we just broke out to an all-time high. So 113,900, the expectation is that likely holds. If it doesn't, buyers all the way down to 108, right? Now, 108 should hold, right, if this market's going to perform to expectations. If it does not, that's another reason to say that this market is breaking down and transitioning into a neutral state, not a bull trend digestion, right? That's talked about here. So those are two key things to look at and think about for this week with Bitcoin. Overall, expect a choppy market, but look for positive price structure, right? Any market can go at any time, regardless of what anybody has to say about it. Strategy here, sell UP fades, right? So if we get a rally into the UP and we can't hold that 121.5, again, we revert it right back down to the directional. A buy DP reversal, we just talked about. A break under, rebase over 114 roughly, revert it to the mid. And then a buy R fade is if we really do get a large breakdown to 107 3/4, that is what we define as the best area to deploy risk capital this week. And then the sell directional breakout is more of a lean, right? We like to call them leans, which is the market is showing that it's not performing to a bull trend. It has the potential to transition into a neutral market state, right? Because you get that price bias, and if we're negative on price but we're still positive on sentiment, that's relatively neutral, right? So that is Bitcoin on the week. Let's take a look over at Bookmap, where we have many resting orders sitting here in the book. So 119 all the way up to 120 right here. Starts somewhat off of these recent highs here all the way up to the CR plus. If those cannot get filled, it's a reason to fade it right back to the directional with the expectation that it's going to be a tighter range for the session. And then on the downside, you got 115 with a significant amount of coin sitting there, 1,600. And that's right here in the middle as well. So we see more alignment a bit lower at 113 3/4, not at 115. But nonetheless, that is a big order that's sitting there looking to buy. So if that market participant is willing to buy them, absolutely take note and lean on that. 114 is where you see 300 coin bid, which is right off of this DP level, right? That's a more aligned order from what we see and what we just talked about. So that is the outlook for the week. I know we actually talked a lot on theory. We talked a lot about market fundamentals this week that we don't typically talk about. So we can open it up for questions. And if there's no questions, feel free to hop in the Discord. If you are watching the recording, ask them whenever you have them, and I will respond when I can get to them. So I'll give it about a minute, and if there are no questions, then we'll wrap it up, and then we'll close it down for the week. All right. I don't see any questions, so we can close it down. So thanks for tuning in, whether if you tuned in live or you are catching the recording. Don't hesitate to reach out, and I will catch you guys all next week. Enjoy.